Hey everybody, today is Friday, December 1st, 2023, and the markets continue to charge higher here. Really an impressive week. We've given really nothing back. The semiconductors were down slightly for the week, but still in a very powerful uptrend, up close to 60% year to date. So let's take a look at these charts and make some sense of it. Here is a new all-time, not all-time high, but year to date new high for the S&P 500 today. It's not the only market that did that, as we'll see in a moment. Going into next week, we still give the benefit of the doubt to the buyers. We still have a rising 5-day moving average, and as long as we have a rising 5-day moving average, we're innocent until proven guilty. We look to raise our stops up underneath key levels, and if we break down and do something like this, well then it means exit and move to the sidelines from a swing trader's perspective. But we're not seeing any of that happen. We're seeing that we instead have turned sideways for most of the week in the S&P 500. That is a correction through time rather than a price pullback. And anyone who's short this market is really experiencing a lot of pain. There's a lot of people who are looking at this market and saying, you know, it's up too much, I can't buy here. And the point isn't necessarily to buy the indexes, but to look at the individual stocks and what's going on in there. Last week I had mentioned a couple of stocks such as AFRM, which had a monster week. A lot of stocks did, don't get me wrong here. RPD still looking like it's got a lot of room to run in here. So this one I think is still destined to head towards this level here, and it's just breaking out finally on that weekly time frame. So a lot of opportunities in individual stocks still. The NASDAQ is still strong. It's holding above that prior peak that we made back in this summer. That is on a closing basis. We're not getting down through it. We have seen the market cross above and below the 5-day moving average. And while we were below that 5-day moving average, the key isn't to turn negative, but instead to turn more neutral and say the primary trend on the daily time frame is still higher, so I'm not going to short these things. I will move to the sidelines, absolutely, and maybe miss out on something, but I'm not going to sell short and fight the large momentum on the bigger time frame. We are still well above the anchored volume weighted average price from those summer lows. Last month's lows. And we found buyers right at the anchor from the middle of last month on this pullback low. That's where the buyers showed up for the NASDAQ. So as long as we're above 385 next week, you continue to give the benefit of the doubt to the buyers. The Russell 2000 is finally showing a little bit of strength here. Year to date, it's now up 6%. And that's good, but the S&P is up 20%, the NASDAQ up 45%. So maybe we're going to see a little bit of catch up in here. But when you look at the weekly time frame, is there really a lot to be excited about? Perhaps we head towards the top end of this range. Truthfully, I'm not interested in trading the Russell 2000 itself. Instead, I look at it and say, this is where we see a lot more stocks starting to participate. Stocks that are breaking out of longer term bases, like the stocks that, AFRM, breaking out of that longer term base. Looks like it's headed towards the anchored volume weighted average price from the IPO. ESTC broke out on earnings here today, as did PATH, P-A-T-H. And these are names that I've been talking about for several weeks now. Pinterest continues, QTWO looks like it's getting ready to continue to move higher. SIG is one. This is Signet Jewelers. I think I mentioned that last week. Who expects a jewelry company to do well? INVA is another one that's looking like it's ready to continue. The opportunities are out there. That's the point. Whether you trade the Russell 2000 or not, because I'm not trading it, really isn't relevant. The point is, though, now that it's gotten back beyond that midpoint that it's been involved in for the last 2 years and back above the year-to-date anchor, perhaps we're going to see the market broadening out, and you're going to see more stocks like those ones I just mentioned continue to rally and push higher. The shares of the semiconductors, as noted, they were down just ever so slightly, 38 basis points this week. Still holding up at that prior breakout point. We're seeing that 20-day moving average come and catch up to price action. And we did see a pattern here this week. We had a high here and a lower high. We had this low and a lower low. And that's where I got cautious. I was very clear that I don't want to sell these semiconductors short because the primary trend is still so bullish. And we're in a bullish time of year. What I'm looking for is trend alignment. And while we have a shorter term, kind of choppy action and the daily still in a large powerful uptrend, it just tells me avoid it for now. Wait for better things to set up. Speaking of good names, I had mentioned IMGN, and actually this is really interesting. I bought it right in here, sold a third right there, and then got stopped out of the balance over there. And then the next day, it got bought out. Now, if you followed what I looked at on Twitter, I think I said the worst case stop would go underneath the prior day's low. So some people might be involved. And I always tell people, it's not about what I do in the market. I miss some good trades like this, but I miss a lot of losers as well. And it doesn't matter to me at the end of the day. And it shouldn't matter to you what's in my account and what I do. People are always saying, well, what did you do? It doesn't matter. If you bought it, I'm happy for you. I didn't buy it, so I've got nothing to say there. It wasn't my trade to celebrate. Biotechs continue to move higher. They've pushed past this band of prior support and now look like they're headed for a test of the year-to-date anchored volume weighted average price in the 200-day moving average. It's really choppy action here, though. It makes it very difficult to trade unless you're trading it with larger stops and longer time frames. If so, your stop goes up under here at this point. Speaking of stops, AFRM, I mentioned that midday today on Twitter, on X, and having a stop right here. My worst case stop is now going to be up underneath today's low. As I mentioned, it's closing in on that anchored volume weighted average price from the IPO, and that seems like a good place for it to maybe slow down a little bit. But I don't do price targets. I look at the market and say, here's what the potential is for this stock. Let's see, what do we have as far as Dow Jones? The Dow made a new 52-week high today. I don't really talk about them, but that's been a monster rally in there. You can't short things that you think are up too much. And we always look at levels as levels of interest, where the market has the potential to find supply, but we don't sell short as it hits those levels. Financial stocks also continuing to move higher. They're getting a little stretched out here. This is the top end of the range that this market has been in over the last year and a half. So definitely don't chase up in here, and I would say raise your stops. Ask yourself, where has it come from? It's just come from the low end of the range all the way to the top end of the range, uninterrupted in that rally. And now it's in a place where it has the potential to find supply. Doesn't mean it will, but it means from a risk-reward standpoint, it doesn't make sense to be a buyer here. Energy names, they broke higher the last 2 days beyond this little band of resistance, but couldn't hold those gains. I think they're just continue to be a waste of time. Oil itself is still in a downtrend. I'm looking for my chart of that. So here's that chart of oil still getting hit in there. While I have these charts up, this is TradingView right here. My main charts are TC2000 for those of you who are unaware. This Ethereum still looks like it's got the potential for bigger moves. So a lot of bullishness overall in the market in a lot of different places. Next week, I'd say you keep your eye still on this RPD. ACHR is a little name that makes electric aircraft. I don't know, they're not profitable, but worth looking at. IMGN is what I just meant to type. I'm sorry. INVA is another one to keep an eye. Wow, my typing's terrible. INVA, though, we mentioned this one, I believe, last week. Still has a great looking weekly chart, so keep an eye on that. And thank you for tuning in. Have a good weekend.